All right, let's have a quick look at the metals. Um, Obviously, gold has broken out of this sideways consolidation pattern as we expected. um, it is getting late in a daily cycle. This was, I guess, this dip right here in this triangle pattern was the last daily cycle low. So we're into 30 days, and we're into a major resistance zone here at about 1520-ish. Um, I said for a long time that there was either, a couple of hedge funds colluded or maybe a big bank, but they colluded to trap one of the big bullion banks into short positions here. The bullion bank was trying to manufacture a bloodbath phase so they could get out of their shorts, but every time uh, they got close to breaking this support, uh, the other side would come in, buy the market back up, which would force the bullion bank to add even more shorts to try and drive it back down. And they did this like 3 times. So they trapped this, what I'm pretty sure is a bullion bank, into a huge short position, and then they launched the squeeze, and the bank is trapped. It had a chance to get out of, to turn the gold market back down right here. They were in big trouble once gold moved above the 13, I believe it's 77 level, uh, right in right in this area right here. Once gold moved above that, that was a breakout, and at that point the squeeze was almost going to be impossible to get out of. And I think that's a big reason for the violence of this move is we've got one of the big bullion banks caught in a huge short position, and they're getting squeezed. So they're having to cover that position into a rising market. But major resistance zone here at 1520. I suspect, this is their last line of defense. So I think they're going to try very hard to prevent gold from um, moving above this on the first try, and then they'll try and cover some more shorts into a dip. Um, but we've got a pattern playing out here. I call it a T1 pattern. Uh, the, the first leg up is followed by a sideways consolidation, and then a second leg uh, that generates maybe not quite as much as the first leg, but pretty close. This was 170 points from here to here, and then we start going sideways, and now we're starting the second leg. I think we get some kind of probably a little pullback sideways pattern right in here, and then um, another rally into the FOMC meeting. So I think this is all in anticipation that the Fed is going to be forced to cut rates and cut more aggressively than they're initially planning on it. I think that's what gold is uh, anticipating and discounting with this violent rally here. So once we get a little pullback into a daily cycle low, then I think we're going to have another leg up into September, something that gets pretty close to 1600, gives us the second leg of this T1 pattern, and then probably an intermediate top, either a day or two before the FOMC meeting or right after the FOMC meeting, if the stock market continues to crash, which I think it will, and there will be plenty of interventions between now and the FOMC meeting to try and keep stocks propped up, but I tend to think they're going to fail, and we're going to have a hard move down in the stock market, which is going to force the Fed to cut probably 50 basis points at the next FOMC meeting, and then that would be a potential spot for gold to top. We've been buying the rumor for months now, and then I think a big rate cut in September would be a sell the news event, and then gold would give us uh, the next intermediate degree correction after the FOMC meeting. So my best guess is a little pullback in here pretty soon, and then one more surge into a top right before the FOMC meeting on, I believe it's either 16th or 17th of September.